Hey, good afternoon, everyone. It's Denise Donahue, your mortgage nerd. Today is Thursday, the 17th. Holy cow, these interest rates are just getting uglier and uglier. So for those of you that this is the first time you guys are tuning in, what we're looking at is the bond market. The reason why is because fixed mortgage rates are directly tied to how the bond market is performing. And the way that it works is that when the price of the bond is trading high, then interest rates are low. And when the bonds are trading below 100, interest rates start to go up. So kind of like a stockbroker follows the stock market, I follow the bond market, and that's why I give insight to my clients to make sure we lock in at the right time and just keep you involved in what's going on. So let's take a look at this. I'm going to max this out just to give you guys an example of what's been going on. So down here you'll see around the end of December, the bond prices were right here. They were hovering right around about $104 a share, so to speak, and that is what you could buy a bond for. Interest rates at that time, the 30-year rates, were in the high 3% range, and everything was great. And then what happened is the start of the year took place, and we saw a huge dip in the bond prices. And remember, when bond prices go down, interest rates go up. And so this caused interest rates for the first time in a while get over 4%. And that is about when people started to have a heart attack until now. And so we saw them kind of level out a little bit towards between about the middle of February to the middle of April. And then look what happened. Another dip in the bond prices, which shot interest rates up. They recovered a little bit, and then look where we are now. Ugh, it is ugly right now. Interest rates are the highest they've been since 2013. Everybody's experiencing interest rate shock right now. So that's because we haven't heard interest rate in the mid to high fours literally since 2013. A lot of people are still thinking interest rates are in the 3% range, but it's just not the case. If you're online and looking at my website under mortgage rates, you'll see that I include every single week, I update what the Freddie Mac report is, and this is what they are lending to the banks. I shop over 32 banks for you to find the best rate, but in my website over here, you'll see that that's what Fannie and Freddie are lending at, which of course the banks have to add their part. In fact, if we look at the Wells Fargo rates, they're just one of the 32. When they're advertising a 4.875 on a 30-year fixed. Now, do you think they're advertising best case scenario or worst case scenario? They're highlighting best case, so over a 740 credit score, 25% down payment, primary home, single family home, all that good stuff. So it's really important that you stay in the loop of what's going on with the rates. If I zoom in on this, let's look at the 1 month. Here's what they're doing. So we've had 5 days in a row of the bond prices dropping. That is not good. I'm advising everybody right now to lock in their interest rates. Now, if this line starts to curve back up and correct itself, then that's a good thing. They'll mellow out. But this is where interest rates are. It's ugly. If you got pre-qualified last year, there's a good chance that you don't still qualify for that same home, because look how drastically different. I mean, look at these rates here. That was 2 years ago. The price then was at $107 per share. Look where they're at right now. Ugh. So remember, second homes, investment homes, putting less than 20% down, all of those things have an impact in your actual interest rate that you get. So make sure you connect with me if you haven't yet started your home buying journey and want to go online and apply so that you can start your home buying journey. Do that. Visit my video vault where you'll see that I do an analysis over waiting 1 year to buy a home. If you say, oh, I'm going to see if rates improve, 86% of economists are thinking that rates are going to get worse. So if you wait a year to buy, I think my video that I have down below says that it's going to be $23,000 that you're going to overpay for a home if you wait a year from now. And then on my website, on the interest rates tab, you'll see I have more videos that talks about how your credit score impacts not only your interest rate, but your PMI insurance. So check out all my videos. Thank you for tuning in. As always, I will update you guys every single week with what's going on in the interest rate market. And please let me know how I can help any of your friends and family buy or refinance a home here in Texas or Colorado. Take care.